One of the concerns I've seen expressed, actually, is that you cannot have earnings growth, which really drives equity values in the United States, proceed at a much faster pace than the economy is growing. And even with the economy at maybe 2.8%, some people are saying right now, we're seeing earnings growth much more than that. Does that mean that equity markets are in for a correction?
So equity markets are certainly in for a correction. The question is when. And I do think, I would agree that the administration probably is throwing a lot of money at the economy without any significant medium to long-term economic gains. But in the short term, it's a huge sugar hit for the economy. Corporate profits are up pretty significantly. That papers over a lot of problems, certainly. And I do think there will be an equity correction, but it's probably not coming imminently, given that we've got 2 more years of stimulus. Come 2020, though, I remember after the global financial crisis, we all fretted over a fiscal cliff. Well, we're going to have a mini one in 2020 in the U.S. as well, unless lawmakers decide that they're going to extend some of these spending initiatives.
So, Megan, if you come inside the Bloomberg here, this takes a look at the outlook for Fed hikes this year and next year. Right now, the market is at over 3, about 3.5 maybe for this year, and then next year it's only at about 1.6. The conversation seems to be, will the Fed signal 4 at this meeting? What are the market participants getting right or wrong here?
Yeah, so I think that's right. There is some inconsistencies in these market-based probabilities because everybody expects inflation to accelerate a bit and everybody expects growth to accelerate and unemployment to come down. But no one thinks the Fed can continue to hike at the same pace that it has been. So, that doesn't all add up. I think probably what investors are getting wrong is, we're not seeing a late cycle surge in inflation, and I think growth might be a bit more tepid than they expect. The Fed will be producing new forecasts at its June meeting. I think they'll probably suggest that inflation will accelerate a bit more than they had previously. Unemployment might be revised a bit lower. And the median rate hike might be moved to 4, but whether it's 3 or 4, that's not really a game changer for the overall economy.